Welcome to your virtual classroom. I am your teacher, Mr. Matuka, and this is our last week of accounting. We are doing adjustments and trial balances. Without further ado, let's just get right into it. I have a bunch of Chrome browsers open at the bottom. One for MindTap with some instructions, the other for our actual assignment. So let's just get right to it. We're going to go to our part 2. We're on chapter 15. I want to send some serious congratulations to those of you who have stayed with us over this time period. You could have easily decided to not do anything and not prepare yourself for your future, but happy to know that a few of you recognize that this is valuable information and it will do you well later in life. So let's get to the problems. We're going to go to end of lesson 1, and we're going to go to our working papers, of course. In our working papers, we should see work togethers and on your own. So there's 15.1, work together. I do apologize for my internet. I'm in a different part of my room, and internet is just bad here. Let's look at the instructions. They give us an unadjusted trial balance. They give us a bevy of accounts. We do recognize that in trial balances that we have to list all of these accounts. So let's see where that's going to be located at. Hey, not too bad. They gave us a trial balance already put together with the majority of the accounts already in it. Looks like we just need to fill out a few blanks. That's step 1. Let's get started. First things first, we need to fill out the top part of our trial balance. The top part is real easy. We put the name of the company, Southside Electric. Next, we put the title of the document we're creating, unadjusted trial balance. And this is for a specific date, so we're going to put in that date, December 31st, 2020. What do we have to put? Dash. Good. All right, so they gave us cash. What comes after accounts receivable? Real simple. Let's go up to the top. We have allowance for uncollectible accounts. Hey, we just learned about that last week. So we'll go to our arrow. There is allowance for uncollectible accounts. What is the balance for allowance for uncollectible accounts? It has a contra account, so it has a credit balance of $48.67. $48.67. Moving on, after supplies office, what comes under supplies office? Supply store. Supply store, $44.83.62. Debit, $44.83.62. And that's supply store. Let's go back and check that again. Supply store, $44.83.62 debit. $44.83.62 on the debit side. That's absolutely great. So now we're on interest receivable. So if we'll go down to our interest receivable, here's our interest receivable. Interest receivable doesn't have a balance, so that's great. We'll put the 0 in there. Sir, can you cut that down, please? And also, now we're going to our office equipment. Or the account right beneath office equipment, which was accumulated depreciation office equipment. So we're going to go to accumulated depreciation office equipment. Let's check the balance. $23,095. $2,395. I'm sorry. $2,395. $2,395. Yeah, make sure that was a debit. It should have been that's a credit amount. Nope, that's accumulated depreciation. That was a credit amount. $23.95 accumulated depreciation. $23.95. Let's get rid of this. Depreciation is a contra account. If the equipment had this value, it's depreciated that amount. So it's got a new book value. And then let's go back up. Federal tax payable. Find our payables. They should be a little bit higher. Here we go. Unemployment tax payable, federal income tax payable. There we go. It has a zero balance. That makes that easy. Federal income tax payable. Income summary is a temporary account. Doesn't have a balance. Depreciation expense, office equipment. Depreciation expense. We know our expenses are near the bottom. Depreciation expense, office. That's zero. Because, you know, those are the adjustments we're going to have to make later. So they don't have an amount. Store probably doesn't have an amount. What comes after store equipment? So office, here store with zero. And then insurance expense comes after store. So insurance expense, which also has a zero balance. But let's put in our insurance. Insurance expense. Supplies expense, office, store, uncollectible accounts expense. Those should all be zero. Supplies expense, source, zero. Zero. Uncollectible accounts expense, zero. So we got all those zeros in. 0, 0, 0. And so now we just need to total these at the bottom. So total. And why is it totals? Because it's more than one. Good. And then we just need to add up these two. I wonder if they want me to put zeros in here. Looks like it doesn't matter. So hey, let's do some math and see what we come up with. I'm going to pause the video. No need for you to watch me add. See if these numbers come up. I'm going to do the math on both sides and then type them in. I'll unpause it when it's time to type. Okay, pausing. All right, guys, I'm back. I did do the actual calculations. Just want you to know, I came up with two numbers that match, so I feel pretty good about that. So with those two numbers matching, that is the first part of this. Let's grade step one, see if we did everything correctly. I had to make my screen bigger so I could see the numbers, so I apologize that. But hey, a bunch of green check marks feel good. They didn't get us for having those blink. All my titles look appropriate. 2 points. Let's move on to step two. So step one wasn't too hard. We just had to take our numbers from the general ledger, put them in our adjusted trial balance, make sure our debits equals our credits, added them up, done. Step two is journalizing the adjusting entries. So there's a few adjusting entries we have to make. Remember, we make adjusting entries for the amount of supplies we've used, insurance we've used. In this case, because we're a merchandising corporation, the merchandise we've used. And the amounts that we use from our assets inevitably become expenses. And then, of course, there's a couple of new things we have. So like when we have notes receivable, we receive interest on those. And then if we have a note that we have to pay, there's interest we have to pay. So interest payable. So we have to make those notes also. Computer's taking forever. My email. I may shut this one down and just call it part one and then give you a part two if we don't see. You know what? I'll pause again and then we'll see what happens. Let me pause. Okay, we're back. I finally got my computer to acting right. And now it's saying journalize the adjusting entries. They give us some question assets, office supplies, December 31st. So these are the values currently. This is what we currently have on hand. Store supplies, prepaid insurance. Journalize the adjusting entries for the supplies and prepaid insurance. The adjusting entry for the allowance for uncollectible accounts has been recorded for you. The December 31st value of supplies and prepaid insurance can be found in question assets. Question assets. All right, so those are the values. Great. So we're just putting in our time. Let's go. Good. Let me put it in. We're on the 31st still. What was the first one they wanted us to do? We're doing them in order. Office supplies expense. Office supplies expense. All right, so we got to find a name for it. Let's go back up to our chart of accounts. Oh, here we can get it. Oh, I shouldn't have clicked on that. That was so big. It's going to take forever. I'm pausing again. Oh, it didn't take that long. Good. Let's go to unadjusted trial balance. Let's find our expenses. We'll go all the way down to the bottom for our expenses. I don't see an office supplies expense. So I'll collect utilities expense. Here it is, supplies expense, office, supplies expense, store. So we had to find that first. So we got supplies, expense. Which one are we doing? Supplies expense, adjustment data, supplies expense, office. And then that's supplies, office. Good. Is that the matching account? We gotta go back up and make sure those are the matching accounts. Let's see. Do we have supplies, office at the top? Yes, supplies, office, supplies, store. Good. Okay, and then we're gonna do it for prepaid insurance. What is the adjusting entry though? So the beginning amount for supplies, office, was $3,108. So on my calculator, I'm going to put in the $3,108 minus my ending balance. Office supplies ending is 548.6, which gives me an adjusting amount of $259.48. So the expense is going to be $2,559.48, and office supplies credited for $2,559.48 because that's how much we use. Great. Need to do this one more time for our prepaid insurance. So if we go back up to our prepaid insurance, was $1,600. So $1,600. We paid $11,200 worth of prepaid insurance. We have $1,600 left. We used $9,600 of our insurance. So we got insurance expense. I'm guessing. We'll check later. And then of course prepaid insurance. And those amounts are $9,600 is how much we used for this fiscal period. Let's go up to make sure those are the right titles. So first, check my expense. So I'm down at the bottom with the expenses, and there it is. Insurance expense is going to be $9,600. It's the adjustment. Then we're going to go back up and make sure what's called prepaid insurance for $11,200. That is perfect. So those are the two amounts. Let's make sure we did everything. Journalize the adjusting entries. We did that. Adjusting entry, done, done, done. Good, good, good. Let's grade the final step. Make sure we're on the right page. Take a quick look. They wanted a third one. So what was the third amount? Let's see what they wanted. Also, they wanted us to do the store. They didn't say do the store. They just said for the office. And then the $9,600. And since we didn't do the office, the store was in the wrong place. And we have a different amount, $29,908. So hey, looks like we're gonna have to come back, take a look at this again. Maybe it's because it's in the wrong spot. I don't know. But there we have it. That's how you do it. Went pretty bad for us, but I think you get the gist. Maybe we'll come back and do the on your own together. All right.